Good afternoon and welcome back to another presentation of another stock and another deposit. Today we are looking at Eloro Resources. It's a stock that can be found on the Toronto Venture Exchange under the ticker ELO and on the OTC, the over-the-counter market, under ELRRF. As always, we are going to dive into the management, the project, the capital structure, the balance sheet, recent news, and my personal opinions about the stock. Starting off with the management of the company. The management team is a little big, and we are going to talk about 3 people specifically. The VP of Exploration, the CEO, and the CFO. Starting with the CEO, that's Thomas Larsson. He has 40 years of industry experience, and on the website they state that this man has raised over $200 million for exploration projects throughout his career. That has been in a couple companies. They say that he has been involved in numerous companies, but they only give a couple names. Thomas is the current CEO as well of Cartier Silver. That is a $6 million market cap exploration company who until current don't have a resource. They don't have a financial statement on their website since 2023. Maybe they have filed it with CDAR, but just didn't publish it on the website. I don't know. I didn't look into it that much. But the Cartier Silver is the property next to Eloro Resources. So this man owns the property for Eloro Resources and the property next doors. And both of these properties are publicly traded, with Eloro having a resource and Eloro doing a little bit better than Cartier Silver. He is also the ex-CEO of Champion Iron Limited. That is a iron mining company with, I looked into the balance sheet a little bit to see how the company is doing, and it looks like they are struggling with the payment of their debts. He is the ex-CEO, so he might have got something to do with the debt that the company took on. But that is all of his track record that I seem to have found online. The VP of Exploration, the Vice President of Exploration, is Bill Pearson. He has also 40 years of experience, and he worked for Desert Sun Mining, which was bought by Yamana Gold in 2006, and he worked for Central Sun Mining, which was bought by B2 Gold in 2009. So you can see that this man has some affinity with the sun mining in the names. I thought that was very charismatic to have those two names next to each other. But he also nailed the previous bull run in gold and silver almost perfectly by selling one property in 2006 and one property in 2009. Those were two very big boom years in the space. So this man definitely knows the gold and silver cycle, and he has definitely profited from it before. He might do it again with Eloro Resources, but that is to be seen in a couple of years. The CFO is Miles, I'm gonna butcher his name, Nagamatsu. That sounds Japanese, so I probably butchered it. I'm sorry. He has a lot of experience in turnaround and restructuring stories. So 30 years working in turnarounds and restructuring. I do think that's very specific information that you bring to a exploration company. I don't really see the link there unless the company Eloro Resources is looking into very creative ways of taking on debt and restructuring the company itself to get away from that debt, but we'll see in the future. He is also the CFO of Forces Metal, which is a uranium exploration company. They do have a very complex company structure with multiple layers of companies owning shares in other companies, which ultimately own shares in the uranium deposit that the company has found. So this man's experience with restructuring, with turnarounds, definitely comes into play when looking at the 4Cs metals. And as you can see in the presentation, as we move forward, the link between Cartier Silver and Eloro Resources is probably also the work of this CFO, because there has also been a couple complexities there, and I saw them as well in 4Cs Metal, so that kind of makes sense. But more on that later. Let's look at the board of directors. You can see right here, the board of directors is not as big as the management team itself. But one interesting thing before we dive into the directors itself, Thomas Larsen, so the CEO of the company, is also the chairman of the board of directors, which means that he has the final say on this board. And that is something that I don't like to see, because he, as a CEO, you can write up plans that you are going to do with the company. You can increase your own pay. You can reward yourself extra shares or stock options, and then the board of directors has to vote on that. But if the CEO is also the chairman of the board, then of course there's a high chance that the plans will actually pass, and that the board of directors is not gonna strike down the plans of the CEO to increase his own pay. So I don't like that. I would have loved to see another person being chairman, but this is simply the structure that the company is in. Starting at the top, we have Francis Savoy. It's an investor in the company. He owns about $2 million worth of Eloro stock, and he has been in the company since 2002. He's also a director of Cartier Silver. So you already see a link here between Eloro Silver and Cartier Silver. And he states on the website that he is an entrepreneur and a successful investor, but he didn't give any other names, so I couldn't look into it more. But the fact that he is also involved in Cartier Silver was interesting to me. Then we have Dusan Berka. He has a lot of experience in marketing and sales, and also in engineering. But given the fact that he has experience in marketing, sales, and business administration, I do really question his engineering side. He has worked for multiple publicly listed companies. One of them is Maduro Metals, which is a low market cap, looks to be failing or failed exploration company, which is of course unfortunate. Next up, we have Richard Stone. He is a asset manager. He founded Stone Asset Management, and he is currently the chairman of another shell corporation, Golden Star Capital Ventures. So this is an asset manager, a money guy that is involved with the board of directors here. Lastly, we have Alexander Horvath, a retired COO of Champion Iron. So you can see that in the management team, we also saw the name Champion Iron and the name Cartier Silver. So these people have worked with each other in the past. Champion Iron, I couldn't find too much of this company online. So if you want to do more research, you can look more into Champion Iron to see what that company did, if it got bought by another company, and what the results of that transaction were. Let's look at the project, because we talked a lot about Cartier Silver and Eloro Resources already. Let's dive into it a little bit more and see what the project actually looks like. Eloro Resources owns the mineral reserves of the Isca project, and that project is located in Bolivia. And to be more precise, it is located in the province of Potosi. If somebody's from Bolivia, please let me know how to pronounce that name correctly. Bolivia is a country where the mining is a big part of the GDP. It's a big mining country. In 2019, the government stated that mining was a direct result of 10% of the country's GDP. And the Eloro Resources itself estimates mining to be about 30% of the country's GDP as of 2024. So you can see that Bolivia has a lot of mining projects. If you are involved in the mining space for a little bit, you can see that a lot of mines are located in Bolivia. It's a very resource-rich country, and they do start mines. It's about an hour and a half drive away from the nearest town, the town of Tupiza. It's about 21,000 people who live there. So if you want to see where this property is located exactly, look for the town Tupiza and then scroll out a little bit. About 50, 60 kilometers up north, you will find the project ELRRF. You will need a 4x4 vehicle to get there, which means that the roads connected to this property are probably dirt roads. If it's raining or if there's a flood or a storm, you will probably not be able to get to the project. So that means that if they are going to mine this project, they will probably need to be laying roads and connecting some power lines to the project. So that means that the potential capex for this project is going to be a little bit bigger compared to other projects which are located next to like international or state-owned highways. The company does say that there are power lines that go through the project, but you know, if you're having to get a 4x4 vehicle just to get to the project, you probably need some more infrastructure building. But it might be worth it to build all that infrastructure because the current resource that the company has is already big. They currently have about 300 million ounces of silver, about 4 million pounds of tin, and about 1.75 million pounds of lead. So for people looking into this project, it looks like it's a very big silver project with 300 million ounces. It is also a very big tin project. So tin might not be the most interesting metal people are looking at right now, but these 4 million pounds of tin do add a lot of money to the resource. They are currently still drilling this project. They are currently increasing the amount of ounces that they have with infill drilling and other exploration targets that they have found. And they do have a projected drill cost of 24 million before they have their next mineral resource estimate. So do expect them to spend a lot of money drilling this project out. So if we zoom into the map a little bit more, here we have, if we go back one page, we have Bolivia, we have Potosi, and then if we zoom in a little bit more, we can see that Bolivia is the light green here. For those who don't know, Bolivia crosses next to Chile. This is the ocean, and ELRRF is right there, a couple 100 kilometers away from the ocean. You can see a lot of things on this map, including the town of Potiza. That's the town that we talked about a little bit earlier. You can see that ELRRF is located right above that. There are a couple other mines in this country, in this region. If you do think that's interesting, you can look up these mines and see how they are performing and what kind of metals they produce. I'm not going to go into that in this presentation, but that is something you can do on your own if you're interested in that. As far as I can tell right now, ELRRF is located in a very remote region. So if they are going to drill and going to explore this property further, to put, for instance, a feasibility study into action, then they are probably going to look at building out the roads to this property. And a big question in this image as well is the fact that all the smelters are located pretty far away from this project. There are smelters in Bolivia. There are railways that go there, but none of the railroads or the smelters are located near ELRRF. So a big question that I do have is once they start mining this project, where is the ore going to be smelted and how is it going to get there? Are they going to build railway stations and railway tracks, that move onto the main railway, or are they going to smelt it in-house and then ship it over to maybe the ports right here so that they can sell it internationally? Those are questions that I would like to see answered in a potential upcoming feasibility study. So if we zoom in even more into the project itself, we can see that this is a overview of the claims that the company owns. Right here you can see the mountain range that it is on. You can see that it is the property claims go over a mountain range. And right here, you can see that in a different image. You can see the drill holes that the company has produced in order to see and scope out where a potential resource for this property is. And if we go one image further, you can see what the company has come up with and what they are projecting. Right here, you can see the mountain range that we looked at one picture below. Right here, you can see the map, you can see the mountain range on there, and this is an image that cuts through the mountain range. So these are the tops of the mountains going down, and the lines are the drill holes that they have drilled right there. They've drilled a lot more, but these are just some drill holes that they use to indicate what they think that their deposit looks like. The shaded area, the red shaded area, is the mineralization zone, or well, the zone that they think that is mineralized. And the sort of tree-like structure that goes through the mountain is the intrusive zone that they think that lava has left here when it was once fluid, and that is what brought all the minerals to this place. So you can see that they think that they have two main intrusions, and if that is true, it can explain why they think that there is such a wide and big mineralized zone in this area. If we go one picture further, we are going to look at all the drill holes that the company has completed, and this is going to be a little bit of a messy image. So you can see the same mountain range up here, the mountain going up and going down, and all these lines are the drill holes that the company has produced. And what I think is very interesting about this image is that wherever they have drilled, they have hit intercepts of either low to mid to high grade. They say that these grades are grams per ton for silver. So they hit either low, mid, or high grade silver in this area. It's the same here. These are a lot more drill holes, right? And you can see that there is mineralization everywhere around this project. They have drilled the most in the top part of this mountain because they do believe that that is where the main intrusion is and that is where the most resources are. As you can see here, for the people who are observant, you can see this kind of blue outlining. That is a pit design. So once this project goes into a mining decision, they do expect this to be an open pitable mine that will potentially be profitable and will potentially contain a lot of materials. So if we go one step further, let's talk about the pit design itself. So I'm going to go back one image. You can see the blue outlining here and the shape that it has. Now we go back to the other image. You can see the same pit design right below it. The different colors in this image are the different zones that the company has identified, because some zones are low grade, some zones are high grade, some zones contain more zinc, and some zones contain more lead, and all of it contains silver. The blue zone is low grade zinc, the red is high grade zinc, the green is low grade lead, and the orange is high grade lead. So you can see that there are multiple different materials in this deposit, ranging from low to high grade. And at the bottom of this deposit, they have found another piece of very high grade zinc. The gray areas in this pit are waste material. So looking at this visually, it's very interesting to see that the company has stated that most of this deposit is going to be mineralized with little waste. And currently, if you look at one picture above, if we map this on this image below, the company is drilling out this part of the deposit to see what is in there. You can see that right there, that they are looking at that to either expand the pit that they have made or to make an underground piece to this deposit puzzle so that they have more resources, and to see if the waste material, the material right here, if that really doesn't contain any materials, or if it maybe contains some low-grade zinc or silver, which will of course impact the economics of this deposit. So to summarize this current deposit, the company has outlined a pit design that they've made. They are currently looking to expand this pit. They are looking for an underground section. They are looking for a bigger deposit. They are looking at infill drilling to see if they have maybe more high-grade targets instead of the low-grade targets, and they are looking to reduce the amount of waste that this deposit can have. And these are some other pictures about the same deposit. So if we look at that deposit and what it actually contains, I have modified this calculation a little bit to include the lead and zinc as pounds. They have no measured resources, so this company has a lot of indicated ounces and pounds, and even more, almost all of it is inferred. So going forward, that means that this company is going to spend a lot of capital and time drilling the project, moving the resources from the inferred category to the indicated category to the measured category, so that they have bankable ounces, so that they can lend money against it. Right now, this is all theoretical. They have a total of about 300 million ounces of silver, about 9.2 billion pounds of zinc, and about 3.8 billion pounds of lead. For a, if we put in the commodity prices, silver is $50 an ounce right now. It's a little bit less, but it's very volatile, and I'm not going to change this every time I do a presentation, so I'm just going to pick 50. Zinc is 144 for a pound, and lead is almost 90 cents for a pound. If we look at the value of this deposit by multiplying these numbers, we can see that the deposit has a maximum value right now of $31.8 billion. The only way you're going to get this value, of course, is by standing on top of the project and magically waving a wand, summoning all of the materials that are inside the deposit and selling it all today for today's prices. Of course, you cannot do that. Of course, you need to invest more money. You need to invest more time. You need to build a mine. You need to get the permitting. And that is why I take a 15% buyout value for this deposit, because that is the average that the industry will pay for a deposit of this size. The value of the deposit at a 15% buyout would be about about $4.77 billion. And if we look at the share structure, you can see that the company has about 135 million shares outstanding for about $0.79 a piece, for a market cap of about $131 million. So the deposit is worth, in my eyes, 4.7 billion, and you can buy this today in the open market for about 131 million. I am not the only one who sees this discrepancy because the management of this company owns 22%, which is a very big percentage. I like to see that. In the next sheet, we are going to look at why this company has such a big holding, why the management has such a big holding. Crescat Capital, which is a money manager, honestly, a very popular one on the internet. They hold about 16% of this company, which means that they do have some influence on where this property is getting drilled and how this is getting presented to the market. And Cartier Silver, this name pops up again, owns 3% of this company. Which means that big investors own 25%, insiders own 25% as well, because Cartier Silver is owned by the CEO, so it's also a management position. They own 25%, and retail owns the other 50% of the stock. If we look at the balance sheet of this company, a couple things are very interesting. This company has, or had, from the last time that they reported, about $4.8 million in cash and about $1.35 million in liabilities. The company has spent $1.8 million in share-based payments to the management team, which, if you see this big of a payment in share-based payments, they are almost all very long structured options, which might explain why the management of this company owns so many shares of this project. It might not be because they put in the money. It might as well be because they reward themselves with a lot of shares and a lot of stock options. In their financial statement, they do say that this is part of a longer running incentive program for the management. So I'm unsure if these shares have all been given out in the last 3 months, or if this is part of like a bigger multi-year incentive program. I'm not sure, but the number itself is something that I don't like anyway. What I also don't like is the fact that the company has spent almost 900 grand in 3 months on professional fees, of which 400K is spent on marketing, which means that the company does market a lot, trying to get the share price up. Which, you know, it can be a benefit for you as a shareholder as well, but you will have to make a decision whether that is money well spent or not. I couldn't find anything about their salary spent, but they also spent about 100K on their office, which means that they've spent on G&A activities about 2.8 million during the period. They did about 1.2 million in exploration, which gives them an exploration to G&O ratio of about 70%. This company spends more than twice as much on G&A activities as they do on exploration. That is something I don't like at all. The professional fees being that high, I don't like that. The share-based payments being so high, I don't like that either. So this company definitely has some restructuring to do, as the CEO would say. The company issued 6 million shares in total during this period, giving them an implied yearly dilution rate of about 22%. So if you hold the stock for a year, be prepared to lose 22% of your position. If we look at the implied projected value of this deposit, you can see that the value of the deposit right now, as stated a couple slides before, is 4.7 billion. They have about 135 million shares outstanding for about $1 a share, and they dilute the stock by 22% a year. That means that in a couple of years' time, your expected multiple of the stock is going from 36 times your money to about 16, and if you hold it longer, to 8. The fact that the deposit is worth so much more than the market cap of the company does give you a long runway in the stock. But the fact that most of the money is spent on marketing and share-based payments also reduces the chance of this multiple ever increasing, because the deposit is very slowly being drilled. In recent events, meaning the events after the latest press release or after the latest financial statement, the company announced that they have acquired shares and warrants of Cartier Silver. So the name is coming up again. And one thing I didn't say yet is that Cartier Silver has a debt agreement with Eloro Silver of about, they need to repay about 400 grand every year. So in some way, Cartier Silver needs to pay Eloro Silver, and Eloro Silver buys shares in Cartier Silver and options so that they have the cash to pay back Eloro Silver. So it's a flywheel of money, and every time that money goes around, the management and all the financial professionals, of course, take their cut, meaning that this company is effectively just slushing money around, taking a little bit every time, and I don't like that at all. I would like to see this tie being cut altogether. Eloro Resources is also still drilling. As you can see, they intersected long intervals in the project of almost 500 meters of 1.7% zinc, and they are still drilling. They've also announced a closing of $14 million Canadian, which is about $10 million US. So the company is currently cashed up for at least a couple more quarters. In my opinion, this stock has a very high difference between the book value or the expected value of this deposit and their current market cap. But the management team pays themselves and the marketing team a lot of money. There is still multiple tens of millions of dollars needed for the drilling of this deposit to even get to a pre-feasibility or an economic study, which means that if you do hold the stock during that whole time, you can expect the potential multiple of your investment to decrease as time goes on. But the deposit that they have is clearly very large, and the way that they have been and are still drilling it does show that the deposit can still grow. But since they spend so much money on their marketing and their financial payments, I don't know how quickly it's going to grow, because I don't know how many drills they can get up and running for the money that they receive. I dislike the connection between the management and Cartier Silver. There's no reason why that connection should exist. There's no reason why this company should own shares in Cartier Silver. If they like the project next door, they should just buy it outright. They have the cash for it. There's no reason to have two separate companies right next to each other. Even though in other videos I say that that is a better solution, I don't actually think it is. They have a very high, I already touched on this, but they have a very high general and administration to exploration ratio. The management does hold, this is a plus, the management holds a large position in the stock, so they are very well positioned when this stock moves up in price or down in price, so the company is spending a lot of money to get this stock price up. And it is located in Bolivia. You have to make your own decision on whether that is a positive or a negative. It is, however, unclear what steps the company is taking right now to permit this project for a potential next step. So that, in general, is my opinion about this stock. The management pays themselves too much, but the project is very big and potentially still growing. The management has a big interest in this deposit growing and this share price growing as well, because they have a very high vested interest. I hope that this presentation was useful to you. If it was, leave a like, subscribe to the channel, and leave a comment on what stock you would like to see next. I want to thank you for listening, and until next time, bye bye.